Hello and welcome to Weekend Investing Daily Bytes. Today is 18th of April. We have started the market after a long break of 4 days, shooting episode 211th. Blue chips falling, that is the title of this Daily Bytes. We saw the best of stocks, Infosys, HDFC Bank, HDFC, just falling like 9 pins today post their results. Now, whenever this kind of a event happens where several stocks which are major index constituents which have a huge weightage on the index fall together, that becomes a very unnerving sort of a situation for the market. But just to sort of let you know that the rest of the market beyond the front runners was not so badly damaged. But this event certainly tells you how far ahead of the so-called fundamentals has the stocks run in several cases, that even a decent looking result gets beaten down so much because the expectation is to continue to accelerate on the performance. So even a 20% growth seems to be mediocre. So it is all a game of expectations that have been built into the price versus what gets delivered. The absolute numbers don't matter as much on the day of this result. It is the expectation that has been built in. There may be a company where it is expected that it will not grow at all. It will be a flat quarter, but it posts a positive quarter, even by 5%. That will be a positive surprise on that stock. So while a lot of people were positioning themselves to go gap up on Monday, it has actually happened the other way around and Nifty fell about 2%. A lot of leveraged players who were doing that probably got hurt a lot today, and hence one should be following trends, following markets, following what your system is telling you, and not get a bit egoistic about what I want to forecast about the market. So as you can see here, this is the market performance of the sectors today, and IT was the worst hit sector at almost minus 5%. PSU banks were also quite badly hit at minus 2.5%. Real estate was hit minus 1%. But this space, the public sector enterprise space, the energy space, that remained in the green along with FMCG and auto, even metals. So the damage was very, very specific, mostly in banking and in IT, along with some other names. So this the IT actually has now been down almost 14% in the last 3 months, and it is the worst performing sector out of all the ones on this table at least. And for the financial year that we started just 18 days back, it is already down minus 10% versus other sectors which are up 10%. So you can see what is the kind of relative performance some sectors have had, and this is why when momentum strategies automatically switch from a losing sector into a gaining sector, that's how you sort of beat the benchmark. So in most of our strategies, we've gotten out of IT stocks, some several weeks ago, some last week, some today. And we've gone more into energy stocks, more into public sector enterprise stocks, and commodity stocks. So you can see that the momentum is playing well in that. And if you see the larger picture in terms of the indices, Nifty Next 50 was reasonably unscathed at minus 0.3% only. Small cap index was also reasonably not so badly hit, minus 0.8%, although during the day it had reached 1.5, I think, on the downside. Mid and small cap index down minus 1%. CNX 500 down minus 1.4. CNX 200 also minus 1.45 and Nifty at minus 1.73%. Now contrast this with how the strategies have done, and very positive, surprising outcome today that almost 7 strategies actually posting between 0.5% and 1.5% on the gains, and only a few strategies having some minor losses between 0.2% and 0.6%. So a very good day from a momentum stocks selection perspective, actually showing you how the relative outperformance actually takes place. So the market has taken a beating. It may take a few days to find its feet. Also depends upon the global outcome. The yields are continuously rising, and I'll show you another insight where it seems to be going away from normalizing as such. So but first, top gainers of the day. So huge gainers, Bharat Dynamics and Capri Global. We hold both of them in some portfolio, up 17% each. Network 18, we hold this plus up 10% each. Network 18 and Mahindra Holiday holding both, and NLC India also up 7%. Alok Industries down 9%. Infosys down 7%. Tata Elxsi we are holding is down 6.7%. Cera Sanitary and Birla Soft down about 6%. These were the big movers and shakers. This was the major support that Infosys had around 1660, which broke down with a huge gap. So whenever there is a huge support, a strong support, the market needs a very strong move at that point to break through. Otherwise it will not go through. So a huge gap down with huge volumes today, and this support has gotten broken. We may see a climb back up to retest this support, but I'm not expecting this price to go above the support anytime soon, but I could be wrong on that. In any case, the idea to show this is that important supports and important resistance get broken whenever they do with a vengeance, and once these are broken, usually the directional move is pretty strong. So we may see this go somewhere to the next support somewhere near 1500 odd. It may happen. It is likely to happen, but we can see about that. Another chart. This is HDFC Bank. Just 8 sessions back, we had this huge move up, and usually what happens is that very, very strong breakouts, when they fizzle out, so like this breakout got fizzled out, the other side directional move is also very strong then, because the stock has trapped most people on the wrong foot when it breaks out, and then when it comes and breaks the the bottom of the breakout candle, everybody will rush to sell and cut positions, because huge positions got built on this day when it ran up, and now cutting, and this has also broken the support here. So maybe some more supports may have to kick in, and 19% move from this top. So some unlucky people who got in at the very peak here, getting very greedy, they've lost 19% on unleveraged position within 8 sessions, and if they were leveraged, God save them. So what we're seeing here is, while Nifty in the last few sessions has moved down a bit, but some of these bigger names have moved down dramatically. So it's kind of a myth busting that, if you go into quality names, if you go into big blue chips, you will not get hurt, but it also depends upon how and when you are getting in, and for how long is your horizon to stay in there. This is a US dollar and Japanese yen chart. There is not much talk about it, but we feel that this is a very, very important chart, because yen is a carry trade currency where everybody borrows in yen at 0.25% and invests in the rest of the world. The Japanese central bank is trying to defend vehemently that 0.25% bond yield, and they're having to sacrifice their currency for that. So just see, from 102 to 126 yen to a dollar, it has happened in very very quick time, and it is a also inverted head and shoulders pattern with a very deep head. So if this really is a breakout of this inverse head and shoulders pattern, I mean, yen will collapse like anything going forward, and that will have a lot of implications on a lot of markets. So we really need to be watching some of these macro charts as well, to see how things are playing out, because if this is happening here, then our currency should also, in unison with other Asian currencies, can take a hit. I mean, if dollar is getting so strong versus the basket of other currencies. So that has implications on us, and it also has implications on carry trade. And this is something that I just wanted to share with you today. So this is all I had in this small, short daily bite. I hope you continue to like this. Please press the subscribe button and share it with your friends and family. And I will see you in another video. Bye.